All right, let's get the microphone test out of the way here before we get started. Let me know if you can hear me across the various chats. We are now streaming to YouTube, X.com, and Twitch. And then there is a couple private streams going for those that cannot access those sites due to the work filters. So let's go ahead and yeah, okay, so I can tell that those that are in some of those private streams are able to hear me okay. Let me know if you can hear me in the public streams, and we're going to get started here very, very shortly. Excellent. So it seems that you guys can hear me on the public streams. So I'm going to go ahead and turn down the music and we're going to get rolling here. Today is going to be a bit of a shorter stream. All right. Let's roll. Hello and welcome to Landy's Crypto Corner for Market Madness Technical Analysis ETF or Spot ETF approval day for Bitcoin here. So we are going to take a look at the charts, and I will tell you right up front that the ETFs are approved. They still need to get their 19B4 approval orders and their effective S1s, but they are being listed on brokerage exchanges now. And one of the funniest listings is Burr, which is, I believe, Valkyrie Bitcoin Fund. So that would be the ticker for Valkyrie there. It's BRRR. So very funny. We are going to start by taking a look at Bitcoin on the typical Bitcoin in 60 seconds chart that we show at the beginning of every stream in reference to the Bitcoin in 60 seconds videos on YouTube and X. And in this case, we did get our confirmed expansion back here on Monday. And we saw our upside targets get hit at the monthly here after previously getting hit at around that $45,500 to $46,000 in the wick. We saw this nice big bullish candle come in, take that $45,500 and $46,000 wick high out, and head towards the monthly overhead resistance here. And we have not seen a close above. We did get a wick up to the monthly swing high area at 48,240. But we did see a close come in just shy of that monthly there at 47,110. Now, Bitcoin is getting expansion of the Bollinger Bands right now. So Bitcoin is expanding away from the basis on the daily. It did close one candle above the upper second standard deviation, thus kicking off Bollinger Band expansion to the upside and downside. So the standard deviations are spreading away from the basis band here. And it has maintained its closures above the upper first, which is coming in just shy of this monthly now. The monthly is at 45.5, and the upper first is now sitting at 45.230. I do suspect that the upper first will move to or above that monthly, provided Bitcoin closes above the upper first today. So I would expect it to continue testing this area that it's consolidating in on the lower term timeframes. Yes, we have seen some pretty big wicks to the downside, especially after yesterday's, bungling of the SEC official account there with no two-factor authentication on, I'm assuming, the account, and assuming that the device was compromised in some manner via either physical it was either physically compromised and or a SIM swap, something like that. But saw a dump off. That dump off wick low has been run now, and yeah, Bitcoin's hanging out between the two monthlies now at 45.5 to 47,000. If it does move above there, then we're looking for that monthly swing high area around 48.2 to 48.5. And then more over time, if it does start closing above there on significant time frames, preferably on the daily, so that it doesn't just turn into a giant wick, then we would be looking into the mid to low $50,000 region, possibly more over time. If we do see today's wick low dropped, I would be looking for Bitcoin to head down to the basis somewhere around 43,850 to that weekly support there at 43.2. If that is dropped, we do have the lower first standard deviation coming in at 42,500, and I would be targeting that area down to the next weekly at 41.8. And then below there, we have to keep an eye out for that lower second standard deviation, as it is coming in right at this higher low down here prior to this current higher low structure. So that is coming in at 41,150 or so. If that area is dropped, we're looking to the low side of the range, somewhere around $40,000 below there. Then we start targeting the weekly at 39K to the monthly at 38.5. And, below there, that area has not been retested. But below there, you can see that there is some daily tests into that monthly area and the weekly just above it after it was breached and closed above here back on December 1st. If that doesn't hold up, then we're looking to the big zone down here at the weekly at 37.7 to 36.2, possibly down to the monthly at 35, and the weekly just below at 34,750. Look, I know a lot of people are looking for like 30K again at some point, and while that is, a viable target, Bitcoin's got a lot of support to rip through if it were to head down. And right now, with the way that the setup is presenting itself, especially with expansion, so we have BBWP expansion as well as Bollinger Band expansion, which, they're tied together anyway. So in this case, we can see that we kind of going back to, prior to January's, move up, we were looking at BBWP or the expansion of volatility within the Bollinger Bands as being kind of our bias breaker if we did see a downside move of price towards the mid-range of the Bollinger Bands, that being the basis to even lower first, but somewhere around the basis. And we did not see BBWP get under the moving average and the moving average get a negative slope, then we were generally looking up and to the right, and that has occurred now. So we are still looking for this to continue, and there is some good fib pulls here. We can see that zone. We're going to get to that zone here. This is our live stream chart that we mark up on every live stream, but just for the range from the current wick high to the wick low of this range, we'll take the breakout here to that wick low of the range on a fib pull, and you can see the 1272 is giving us that $50,000 target as I struggle to find the arrow yet again, and it's still messing me up, and they changed that a while ago. The $50,000 target coming in around that 1272. The 1414 is at 51.5, and the 1618 is there at 53,400. Now that was a big area, that Bitcoin, it was criteria for a much larger downside move after the 2021 dump off to the Wyckoff reaccumulation and spring event that put in the all-time high at around $69,000. The 53.4 to 8 area was a very, very big area that we were looking at for a potential breakdown to then go and retest the $40,000 and $30,000 levels that eventually broke down during the Luna and then subsequently FTX crash that put in the bottom there. Now, the 1786, when looking at a fib extension like this, I do look for that 1618 to 1786 on any breach of the 100% of the fib or the one spot. The 1786 is coming in directly in line at $55,000. You could take that 1888 up there as well. coming in at 56,000. That is a viable area as well that we've seen get hit with consistency. Now, that's where, if we do see the monthly swing high taken out, now remember this was the lower high that was solidified, that kicked off the bear cycle. And if this area is closed above, and that is at 48,240 on a daily and then subsequently a weekly, I would be looking for the low to mid $50,000 region. You can see how that lines up with a fib extension off of this current consolidation. So, well, that is not necessarily a given. It has been very, very accurate. And when taken in conjunction with levels of horizontal support and resistance, it has been, well, it's been pretty darn easy, I'd say. We've had it very easy for about, well, since the bottom, which we called at between $15,000 and $16,000 here on Landy's Crypto Corner. And, that was a group effort, but we all pretty much came to the same conclusions that that was going to be around the actual cycle low. And it hit it literally in between that $15,000 and $16,000 here on spot price at that 15.5. Now, what we are going to take a look at is our monthly support and resistance zones. Now, this is where we have mapped out the closes and wicks on a swing basis. So we are going to throw on the swing indicator here. We'll turn off the Landy bands real quick, and we're going to go out to the monthly. So above this area, there is another swing, but remember, we're looking at a swing high. So these wicks, these were lower term time frame swings on the weekly. They're at $53,000 or so. Not as significant an area when looking at the monthly. So if we do start to see the monthly close above this lower high here at 48,240, the next big area on the monthly time frame is this $58,000 on a close to the next close here in orange, which is at 61,350. And then, of course, we have the swing highs, and those are the wick highs here coming in at 64,900 and $69,000 here on Coinbase. So that is that's the bias here. We start closing monthlies above that 48,240. There can be pullbacks, maybe even a high put in, but this is an uptrend on a swing chart and a close. So on the swing chart here, you can see the downtrend very clearly defined on the swing chart. And then, of course, the candle closing highs here that set off the test down to test the close opens at, this was not a close open low. This actually ended up being a swing low to a close open high put in back in, that was confirmed in April of 2022. And in this case, what we saw at this point was the test down to the swing low at around that 28,800. Once that was breached in the subsequent June candle, then we had not only confirmation of the lower high, but the only thing that could happen from here was lower swing lows, and of course, because of that wick, lower lows on a closing basis. So that was, that was telling us that we were looking for much deeper downside targets and for the bear cycle to continue into the actual lows. Man, we worked hard this past bear market, so I want to thank all of you who hung out with me. I have a very small following. We don't do any paid content. We don't have any paid indicators. I don't do any paid discords or paid groups. It's all just free information that I wanted to share with, a small group of friends who were trading, and some that are in industry, and then that expanded out to bringing it public. And, I'm glad that everybody was hanging out with me during that time period. This is with the spot ETF. There's a lot of hand wringing across crypto Twitter or crypto X, crypto YouTube, and many other places that are maybe rightfully cautious about the ETFs, but we cannot ignore the chart just because there are other players and other mechanisms to bring liquidity into Bitcoin. We shouldn't automatically look at that as a bad thing. And those narratives are something that I will tackle as these ETFs go live. Everything from 51% attacks to quantum attacks with via quantum computers, cracking, encryption. I'm going to address all these things over time because they've been a hot button topic across all of these various social media platforms, and also within this group here. A lot of questions about it, and I will clear up misconceptions, at least from my viewpoint. I'm of course not the be all end all when it comes to these things, but for those of you that have been hanging out with me, you can see that we have a wealth of knowledge in this group, and we've been very, very accurate on not only price and price levels for trading, but also the the um, the debunking of some of these pretty silly narratives. So we will continue to do that going forward, and there's going to be a lot to talk about. And I do look at me personally. I do look at this as well, Bitcoin's chance and its beginning, starting tomorrow with open trading of these ETFs. We're looking at the infiltration, and that is Bitcoin infiltrating the traditional financial system. So I view that as a good thing, not as a bad thing. So yeah, that's my piece on that. Let's go ahead and take a look at this chart. Of course, we have already seen this, but on the swing chart on the daily here, you can see consolidation, upside break. We did have a lower low swing. Of course, we did not get lower low closes in this area. We had a little bit of a consolidation with a higher low over here, consolidation, and then a push up to that monthly overhead resistance. So looks very good. Let's go ahead and check. We already saw BBWP still getting expansion. Yes, it has lurched over a bit because of yesterday's candle, but it's well above the moving average. And until we see the BBWP get below the moving average and the moving average get a negative slope, we're not really looking for another compressive phase. When looking at daily Stoke, or the daily Stoke, in this case even, we're looking at a regular Stoke. This is close over close price momentum with pivots. This is a free indicator. You can find it in the indicators section. This is the BA reverse Stoke panel. There are other Stoke indicators, both paid and free. This one is just one that I know most of you guys are using right now. What we're looking at in terms of pivot is 45.5. That is the monthly close. So we do want to see this maintained. If it does lurch over, remember that is only an initial cross down, much like what we saw back here from Saturday into Sunday. So that was Saturday the 6th into Sunday. We saw an initial cross down, but no confirmation. So the D read did not cross down with the K read there. And, we could see another scenario like that. You want to wait for, confirmation on this in most cases. So 45.5 is going to be that number. If we do see Bitcoin head up to the overbought zone immediately, meaning in today's candle, this number will update after the candle closes, but that is around 48,800. So that would be above the monthly swing high there at 48,240. So that 48,2 to 5 area, that's where we're looking for, continuation into the mid to low $50,000 region as well. When looking at some major time frame closes, we've got the 2-day here. that is coming in today's closure. Let's go ahead and get rid of the monthly swing chart. We already reviewed that pretty well there. And we'll turn on the Landy bands, which is just this is a free indicator for those that didn't know. You can find this in the link in the video description here on YouTube. It's also in my profile on X. It is a private indicator, but it is, as long as you have the link, you can add it to your chart. It's not a paid indicator. It's just not publicly released because we are still working on it. There's some other features that we're looking to implement here, including the medium-term time frame levels or multi-time frame levels that JR was working on. We will get that done. Just a little bit of a slow go as I have been very busy lately. We do see here on the 2-day chart that we have compression of the Bollinger Bands. This is what we want to see. Now, the expansion phase would kick off on any close back above the upper second standard deviation, and that is at $46,000 and I'm sorry, 46,100 almost. We would see aggressive expansion to the upside should we see a closure above there. And the other way would be dropping the wick low. Then we would be looking at, and the lower second in this case, we would be looking at downside expansion, and that is coming in at 40,800. Now that would be the last swing low here on the 2-day chart. And I would be looking for it to also break down below that 40,150 or $40,000, depending on your exchange, to go test somewhere around the highs here at that 38 to 38,500 monthly, maybe 39K at the weekly. If it does break down from there, then we looked at those other levels that we called out earlier. This is a beautiful, beautiful setup. This is telling you everything you need to know on the 2-day chart. So just wait for the closes. Right now it is trading below the upper second standard deviation. As long as it is closing above the basis band here, we will continue to see this sideways and up compression. If it does drop the basis band, then our bias is to start looking at the lower first and lower second. Lower first is coming in at 42,100. Lower second, of course, again, is coming in at that 40,800. If we do start to see those closures below the lower second, then we would be looking for expansion to the downside into those support levels. To the upside, well, expansion into those overhead resistance levels. All right, the expansion phase of price has begun to kick off. That is telling us that volatility is beginning to increase, and we are waiting for those either the upper second standard deviation or the lower second standard deviation to be breached and closed above or below to get follow through and confirmation. We do also have confirmed upside cross or pressure here on Stoke with the momentum pivot at $44,000 right now. So it is likely that if Bitcoin hangs out where it's trading now, of course, it would continue its upside trek here. And you're likely to see this pivot number update to somewhere around the current daily lows at around that $44,500, $45,000 area. Of course, the big monthly area as well is another possibility. I would just wait for close and then reference the Stoke pivot there. But don't assign weight to any one indicator. Remember your 4 key pillars to trading. It's trend first. Then you have support and resistance. You have volatility, and that all creates momentum. So those are your 4 keys to trading. Never forget that. You can't go wrong. Most people miss volatility. And if you aren't tracking volatility and you aren't using that in conjunction with trend and support and resistance, then you're going to likely be leaning a little too heavily on momentum indicators, and that can be misleading in many cases. So make sure you have all 4 and that you are tracking all 4. When looking at the weekly, we do have the upper second standard deviation here. Up there at that 48,800. Go figure, that is the daily overbought level on a regular Stoke. So just wanted to reference that again. We did talk about that earlier this week. As long as Bitcoin is closing above the upper first standard deviation of the weekly, and that is coming in at 41.9, then we are looking at the possibility of the upper second getting swung, meaning traded above, and or getting hit directly. And that is, well, it did come in about a little less than $1,000 shy of it so far. Now, this will adjust in real time before the weekly close. So if Bitcoin does start trading towards it, you're likely to see the upper second start to come in around the $49,000 to $50,000 level. So again, another confluence for that mid to low $50,000 area if that monthly swing high at 48,240 is breached. So keep that in mind. Of course, if we do see a closure below the uppers first at 41.9, that subsequently drops the lows of the range here around $40,000, then we start looking at support and resistance levels. Again, that's the 38.5 monthly to 39K weekly. Below there, 37.7 weekly, and down to 36,200. And just below there, we have the basis band coming into another big monthly level. So recall that we have these monthly levels down here below. So we have the weeklies, which would need to be breached at 43.2, of course, 41.8, and then the lows at 40K dropped. Then we have the weekly at 39 to the monthly at 38,500. Below there, we've got the two weeklies I just said at 37.7 to 36.2. And then below there, the big monthly at $35,000 and the weekly just below at 34,750. Now, why is that important? Because if we did start to see the upper first dropped on a close, and then we subsequently see the low dropped, you could also take the open here from December 4th, which was at 39,984, $40,000 basically. Then we can see that the basis band is coming right into support there at $35,000 on the weekly. So that would be the next big area on the weekly timeframes. If those supports fell apart, that we would be looking towards, and it falls right in a monthly and weekly zone. And those are major areas. We had that higher low at $35,000 specifically. And, if that did fall apart, I'm sorry, that wasn't it was the first higher low before, before the spring event and the all-time high at 69K. So pay attention to that. If you do start seeing that, hopefully I will have some sort of a video where I talk about that particular price action. Let me go ahead and take a look at the chats. I know that a bunch of people piled in here, and we do have a lot of chats going right now. The private chat is going crazy. Oh, okay. Jimmy's got it under control. All right, thank you. Don't have anybody over on the X chat. There are a few people viewing, though. If you want to chat with us, I am watching the X chat and the YouTube chat. I'm having trouble with the Twitch chat. So for those of you that are over on Twitch, I do suggest that you head on over to either the X chat or the YouTube chat. The YouTube chat is gated. You do need to be a YouTube subscriber, which is free. That is so that we don't get assaulted with bots shilling random stuff. All right, let me go ahead and take a look at the chats here. Hi, Jedi. Hi, Roka, Ivan, Spin, and quite a few others. I know that Mr. No Name is here as well. Okay, you're in multiple chats, sir. Okay. If anybody has any questions or comments, we're not going to be doing the normal stuff today. I actually have some errands I got to go run. Yeah, Jimmy knows what that's about. Yeah, I've got some stuff I got to go do today, and in preparation for tomorrow. But if you have any questions, comments, or anything like that, go ahead and put them in the public chats so I can see it and address it before we jump off here. If there's anything that I missed that you wanted me to follow up on also, please let me know. Okay. So there was something wrong with the sound. I didn't know that. Okay. Hi, Cheryl. Okay, Cheryl's in there as well. How you doing? So for those of you that might have just joined, I already went over the bulk of what I wanted to say regarding the technicals on Bitcoin right now. When looking at the daily and longer term timeframes, spot Bitcoin ETFs are basically approved. The only thing that's left to do is paperwork, and that paperwork is it might even already be in. That's the 19B4 approval orders and the effective S1s. Once those are basically filed, it's at market open, all of the different tickers for the Bitcoin spot ETFs should be live. Many brokers are already taking limit orders. So, I mean, all of the major brokers in the United States are taking limit orders on all of those tickers as well. I can aggregate some of the tickers for you and or repost them from James Seyfart. And if you like, otherwise you could just go follow him. He's got all the tickers listed out. You can also go to DTCC and the tickers are there. Yeah. Okay, so doesn't look as though we've got too many questions here. Some of them are questions related to subjects that are things that we're going to get into, which is options trading. I will be talking about options with you guys. That is going to be a big source of liquidity. What I will show you here is on the open interest readings for Bitcoin. We are seeing the lead, CME taking the lead very aggressively. You may remember that I talked about coming into spot ETF approvals. You want to see CME leading in open interest. You don't want to see it, you don't want to see one of the Mickey Mouse exchanges, ahead of CME in this case. And CME is running OI levels at around 6.21 billion to Binance's close second there at 4.27. So it's almost a $2 billion lead. It's a little less than $2 billion in terms of open interest. Is there going to be another announcement from the SEC? Probably later today, after market close, and maybe even after post market. So I believe it's a 4 to 6 p.m. Eastern. It's either going to come in at the end of post market or after post market. So that is likely what's going to be happening. Probably some sort of I would imagine there'd be a press conference, especially considering what happened yesterday with them, losing control of their account and then somehow subsequently regaining it almost instantly. That's what a silly thing. I nothing for nothing. That seems even the explanation and the confirmation that their account was apparently breached with no TFA, 2FA, with no 2FA, and to even get it back that quickly seems kind of silly. So, that's who knows. It could have been something internal as well. We don't know, nor does it really matter in the grand scheme of things. Yes, almost all of the ETFs have already seeded. Yep, they've got their seed rounds in. Their seed buys are in. Yep. Another question here is very specific again to options and option spreads. That's something that we are going to talk more and more about. I want to see like the first week of options before I really start getting into the weeds of that with you guys. I also want to see how some of these on-chain focused or quant focused sites react to that particular liquidity here and how they aggregate and display that data. As they definitely will. I believe Crypto Quant and Glassnode are going to be probably the leaders in the market in that regard when looking at open interest. Really depends on what they want to pay for on the API side. So, but you're probably going to see a lot of terminal guys, Bloomberg terminal guys talking about it, and liquidity flows, yeah, stuff like that. Another question: what do I know on the prop shop side of things? So I obviously can't talk about specifics as it relates to some of my work, but what I can tell you is that prop shops and liquidity providers, otherwise AKA market makers, are already ready and have been ready for quite some time. Yes, there's calls going on, there's conference calls going on, all kinds of stuff. Yes, I can confirm that. But no specifics. I cannot give you specifics in that regard. It's not going to go without liquidity providers, otherwise known as market makers. So yeah, there's numbers floating around out there. You know, I'm not going to comment on whether or not they're accurate. Yeah, nice try. Nice try. You were trying to trick me into saying numbers. Yeah, no, I can't do that. Sorry. I'm here to help you learn trading and charting. Yep, that's it. Yes, I agree. Um, so the most important liquidity side of things to track, you've got the derivatives market trackers like Coinalyze and the like. Your Coinalyze, CoinGlass, Glassnode, CryptoQuant, and a couple of others here and there that are pretty prominent. I do suspect, yes, I do suspect that they are going to update with, liquidity maybe on a per ticker basis, or maybe they aggregate the tickers. I'm not really sure. That data needs to come in first, and then they got to figure out how to handle it. Will I be discussing the Greeks when? Well, I mean, if we're going to be not if, but we're going to be talking about options. So yes, I will. I will do basically a primer on what options are and how they work and what the Greeks mean. Yep, I will be doing that. What else? I will give you like basic strategies, and I will tell you what my preferred strategies are in given situations. But once I start talking about options, I'm going to give you the primer on options, and then from there, you have to do a lot of legwork. It's the same, when we talk, for those of you that were new to technical analysis, when I'm talking about trend and I describe trend, and we're talking about closing highs and lows versus swing highs and lows, and and then you have to go and really dig into it, and really do your research, and do a lot of observation of live charts and historical charts. I'll give you the best practices, stuff like that. Same with support and resistance, volatility, momentum, and all of the various indicators that go along with that. But you do have to. You're gonna have to do a lot of legwork if you want to trade options. It's not just going to be simply, "Hey, Landy, talk to me about the difference between um, calls and puts, and how a call can be bought and sold and a put can be bought and sold." And then he explained what the Greeks are, and then gave us basic strategies that are used widely in traditional markets, and options, and by options traders. And but you have to figure out what works for you. You have to dig into each one of those topics and really research it, and so that you can understand it. But I will do my best to give you the primer there. Maybe over time, I can get into like a full, 40 to 60 hour educational series regarding that. But we're still going to be doing some of the charting basics that has to come out. So it would be a little while for something like that. But yes, we are going to be talking options and quite a lot about it. Like I said, I do want to give it about a week to shake out, to observe what's happening on that side of things, and what the spreads are, and what the Greeks develop into, and then we'll go from there. Yeah. Any questions specifically about Bitcoin's price action right now? Nothing really? Okay. Let's go ahead to lower term timeframes just to follow up. We had an area that we had picked out as an area of interest, and that was on the move up here on Monday. We picked out this consolidation area of interest, and in that regard, we'll get rid of the swing chart here. We'll keep Bollinger Bands on, and we can observe just how clean this price action was, even on the dump off yesterday. Oh, we're missing something here. That's probably because don't need that. We need this. So we had previously spoken about a zone of interest here on the lower term timeframes. Basically, if Bitcoin dropped around 45.5, then we were looking back to 45.2 down to the upper to possibly mid $44,000 area. We did see the wick lows coming in at around $45,000 even, I believe. So we didn't, or no, I'm sorry. The low did come in a little bit lower. They're at 44,320 on this last spike low. But you can see that the closes all came inside of this range here from this short-term consolidation on the 15-minute prior to the push up above the $46,000 wick high, which was back over here. So we saw the consolidation above this range right at the lows there at around $45,000, and then boom, up. And when that dump off occurred, we went wick to wick basically with this consolidation wick low at around 44,700. Got a little bit of consolidation, a downside move back into liquidity here, and then a close slightly below what I have marked. But I mean, realistically, the move up to spike low is something you could take, and from that move up initially, and you can see that it all stayed within the zone of liquidity. So looking good. I mean, for those of you that might be joining a little bit later, go ahead and reference the beginning of the stream where I reviewed what I'm looking for in terms of price action and the levels and the bias right now, especially the 2-day. But yeah, that's, we're not going to be looking at Dixie today, gold or any traditional market stuff, because I do have, I got to go probably in the next couple minutes here. So there's a lot going on, obviously. You can tell by what's going on with the ETF approvals rolling in and being listed, at brokerage firms. So there's some work to do right now. I will. Yes, I know. I keep saying that I'm going to do the staring at charts, 10-minute videos and shorts and stuff. There's been some outside mitigating factors the past couple of weeks that I've had to deal with. For those that do know, I have a disabled child that I'm taking care of. So there's been some stuff going on. I won't get into it, but he's good. We're good, but I needed to dedicate my time to that. So hopefully, as I will have a stream on Friday, hopefully tomorrow I will have either a 60-second video or a 10-minute staring at charts video up for you. Especially tomorrow, I really am shooting for that because we will have listings up and tradable. So we really do want to see how price reacts. And and where things go from there. So yeah, it's about Sam. Yes, yes. Yeah, go ahead and hit the like. It does help. We don't, especially like a channel like ours here, we don't do any paid stuff. So this is all just sharing observations and learning, right? So teaching you guys what I know from being in this in markets for a very, very long time. I might sound young. I am not. But yeah, Bitcoin's kind of hanging around this zone of liquidity right now. This is all, we can see this across the charts. There's not much that we can't see. The charts are going to have everything you need to know. If you weight any other factors outside of the charts, then you're probably going to end up with a bias that is likely to get you into a bad position. So watch your charts, understand what's happening on your charts. That is going to be your key to putting on good trades in both directions. All right. I want to leave you with that. Be careful when liquidity hits tomorrow. You need to be careful. I'm not looking, necessarily for anything crazy to happen in terms of like giant dump offs or giant pump ups, which still might happen, but I'm not looking for that kind of crazy stuff necessarily. I'm looking for most likely some lower term time frame volatility. So if you're high leverage and you're trading 5 and 15-minute charts, you need to be careful. And not financial advice, but as I've always suggested, lower the leverage. If you're on one of these Mickey Mouse exchanges, keep the leverage low, be logical in your approach, have a trading plan that you have back tested, understand what it is that you're looking for, and above all, remember trend, support and resistance, volatility, create momentum. Your 4 key pillars to trading. I know I said it earlier in the stream. You need to just make sure you're locked in. All right. And be ready for anything. It's probably going to get crazy or not. Maybe it's a big non-event. Who knows? Could go anyway. But yes, I am just going to peruse chat here before I go. Thank you, Sam. Hi, Baba. Hi, Roka. Hi, Don. I didn't realize Don was in here. How you doing, Don? And for all the others that might not be chatting right now, thanks for hanging out with me. This is not the end, but I really do want to thank you guys again for hanging out for the bear market, because I hope that you learned a lot. Also, bear markets are boring as hell. We worked hard during the bear market, very hard. All of us that were here, all of you that joined me for literally daily live streams for a long time, 2 hours a day, really hammering on charts and explaining things and talking shop when it came to what to look for. We worked hard, and we've had a very kind of low-key, easygoing year. I mean, all of 2023 was up and to the right, and it was easy going. It is going to be a little bit more difficult because we are entering that dicey period of the transition where things are going to get volatile to the upside and downside. So, keep that in mind, and have fun. Don't forget to have fun. If you know what you're doing, you have a plan, this should be fun. I know I'm having a lot of fun in the markets, and I hope you are too. And if you aren't, I hope you learn, and I hope to continue to teach you what I know, and that you can, and then you can have fun and success in the future. With all of that being said, I want to thank everyone again. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, above all, stay safe. I am going to turn on the tunes again, and they will be up for about 10 minutes, maybe 12. So if you do want to hang out and talk amongst yourselves here and listen to some beats, you're more than welcome to. And with all of that being said, I know I'm a little rambly today. I apologize. Sorry. There's so much going on right now. But yeah, with all of that being said, well, Landy out.